Thank you so much. So, today we're going to be talking about how, with the emergence of FinTech, we've moved to digital marketplaces, and how, earlier where we had financial and securities products that were highly regulated, and, uh, although there are gaps there, the regulation has come a long way. But with trading and commerce now moving on to online, both retail and B2B, what are the challenges that are coming up? To kick off with, I would request if you all could, just give a brief introduction of yourselves for the audience, and give, your general overview on how you see the role of regulation in digital marketplaces as we move forward. I'll kick off the Nirav, but no particular order, just the order I'm seeing you guys on screen. So I request Nirav to kick it off, and then we move to Madhusudan.
Great, thank you, Prasar. Thank you, everyone, for having me on this panel. So my name is Nirav Choksi. I'm the CEO and co-founder of CredAble. CredAble is primarily a fintech focused on working capital solutions. We partner with very large corporates in India and enable large-scale liquidity programs for their vendor, dealer, distributor, retailer ecosystems. And we use extensive technology and in partnership with large financial institutions and capital markets to enable these transactions. We are probably at in the middle of what I think is a regulatory transformation that's happening in this country. One of the biggest challenges, I think, for inclusion and proliferation of credit in this country is the ability to onboard, customers digitally. And I think that's one area which while there is a lot of movement on the consumer side of the business, on the B2B side, it's still very, very challenging. So the amount of time, effort, and money that is spent in trying to onboard an SME or an MSME or a mid-market corporate onto a lending program by banks and other financial institutions is still very paperwork driven and very physical driven. And I think that's really the biggest impediment to creating availability of credit to this segment. So that's my opening thought, and I would love to build on from there.
Sure. Thanks, Nirav. Appreciate it. Madhusudan, if we could have a few words from you and an introduction about yourself.
Hey, sure. First of all, thanks, guys. Thanks for inviting for this forum. So myself, Madhusudan, I'm the co-founder, CEO of CreditBee. So I also represent a not-for-profit organization called FACE, FinTech Association for Consumer Empowerment. So it's an organization where we are about like 15 plus B2C lenders, which has taken the FinTech B2C lending as technology as a core. And we have formed that association so that we could kind of rightly represent to stakeholders, consumers, media, and whatnot. All right. So with having those two positions I'm representing for this forum. So what we are basically run CreditBee is a credit platform, kind of integrating with multiple NBFCs and banks. So we ourselves are an NBFC, which is a systemically important NBFC, and we try to solve for consumer needs. So what happens in India is that, if you look at the entire bureau penetration, it's roughly about like, all the bureaus included, maybe having about like 20-30% of the entire population's bureau footprints. So that leaves us with a huge a billion plus people who are new to credit, is what we call, basically not having a kind of a financial footprint on bureaus. And trying to solve for that is towards financial inclusion is what we are trying to really having that goal to solve for, right? So having said that, there have been multiple challenges in the B2C lending, what we have seen recently, and just kind of switching gears towards regulatory framework, it's definitely evolving, and it has taken a lot of transformation, and it's going through a transformation now, with RBI setting up a new task force to come and kind of look at how the B2C lending is happening currently, and then what kind of regulations would come out. Happy to speak more on those things and then kind of share our thoughts as well, because we give our own representation to RBI task force in terms of how this could be kind of formulated or regulated. Happy to kind of share those thoughts with you guys. Yeah.
Thanks, Madhusudan, for your opening thoughts. Nirav, I'd like to come back to you. You were talking about how a lot of processes have been traditionally paper-driven, and currently, as the digital ecosystem explodes, there are challenges around that. Now, we do have a great framework, but there are certain judicial issues that have come in the way of that. How do you see that happening? And then, with the emergence of, for example, biometrics that go beyond Aadhaar, right? How do you see that becoming easier, not just from a credit risk perspective, but also from a transaction approval and ease of transaction perspective?
So Prasar, for consumers, consumer lending, I think there is, and Madhusudan could talk more about it, but there is already an established video KYC digital signing process, which is widely accepted by a lot of financial institutions. Now the challenge here is not, and of course that will evolve, right? That will become more and more easier to do, etc., etc. The bigger challenge here is, what about SMEs? What about MSMEs? That entire onboarding process today is still, is largely physical by banks. So they need to do what is called an OSV, which is original, seen, and verified. For every KYC document, they need to have physical copies of KYC documents. They need physical documents signed and contracts signed. And as a fintech platform who's trying to make this, all inclusive and grow credit in the country, it becomes very challenging to onboard vendors. So let me give you an example. We're working with a very large agri-tech agro player, global company. There are 4,000 dealers, and they want to onboard 4,000 dealers onto a channel financing program. Now, imagine, how are you going to do that? If you have to do that process physically. So those are really challenges. I don't know how biometric would solve that, because unless you have a biometric embedded onto your mobile phones, and those are technologies which are not yet completely reliable. Unless that happens, you'd probably not have, you go too far with that. And I think that use case would be probably more relevant to consumer lending.
Understood. So, Madhusudan, you were, obviously, while we love your perspective on what Nirav just said, but also given the fact that you said that you are, assisting the RBI in terms of, evolving regulations. How do you see, this entire ecosystem? How do you see us improving it, and how do you see us doing much better than where we are right now?
Sure. See, I think always RBI has been of the perspective that they don't want to come and regulate in the very initial days. They want the industry to evolve, and the way it is evolving, they want to kind of come and put up the regulations, because otherwise it will kill the innovation, right? So, while those thoughts were very genuine and noble, so what happened in the industry? I think recently we have been reading a lot about the lending apps and the kind of ground situations that happened probably in certain regions of AP, Telangana, and whatnot. Of course, I mean, those were very unfortunate events, what we got to read about, right? So with that, I think the regulations and RBI had to step in. So let's say that was kind of a trigger, which made the regulations to come in. It was never the intention of RBI to kind of disrupt the innovations or possibility of innovations, what was happening in the industry. So I think that's point number one. Point number two is, there are different ways the fintech platforms are working today, right? So there are NBFCs which are running an app or a digital platform by themselves. There is no other company, but an NBFC owns an app and runs it. The second thing is that there is a platform, and there is a group company level NBFC, where the NBFC is also part of the group company, and it just works on the platform, where the platform is owned within the group company. Then there is a third category of apps wherein they are pure play platforms. There is no NBFC or whatsoever within the group or within the related parties, and they totally rely on other banks or NBFCs to kind of operate on these platforms, right? Now, the larger issue where it comes is the RBI as such today is regulating the NBFCs and banks, right? So the moment somebody is acting as a pure private limited company and acts as a platform and totally dependent on third-party NBFCs and banks, I think that's where the RBI wouldn't be kind of very much aware of what the fintech is actually kind of doing it, whether it is following the processes, be it the KYC processes or the fair practice code comes on the the collection practices, or in terms of the pricing. So we have seen some usurious pricing also what's happening in the industry. So that's something goes beyond the radar of what the RBI regulations are, right? So I think within these three classes, definitely the first and second, where either an NBFC running an app or there is an NBFC within the group of platform company, and then they are kind of operating it. They are fairly comfortable because there is a subsequent reporting that happens to RBI on a monthly basis or on a quarterly basis about all the activities and whatnot. But when it comes to a pure play platforms, which we have seen in the market, where the issues started happening, were all of these pure play platforms which are kind of trying to look at some of the NBFCs which are of very small size, right? So trying to take a control over the NBFC operations. And what the new thing that has happened in the industry is NBFC license renting. So that's the very unfortunate thing that's happened, where the platform has not under the radar of RBI, but these platforms started using or kind of renting out licenses from an NBFC which was dormant or not with much of activities, or a very small scale kind of an activities. I think that's what went without the purview of RBI, where the issue started happening. So now that the new task force has happened, I think there are two ways to look at the regulations. One is not everything need to come under RBI. So I don't think RBI wants to directly control each and everything, but there is a other way to deal with certain regulations, which we call it as SRO, or a self-regulating organization. For example, for payments, they have set up an NPCI, which is a very payment-specific a body which has representation from regulators, from government, from the industry players, and other stakeholders as well. A similar kind of an entity is what I feel probably is the a right direction to go towards, an NPC mirrored kind of an self-regulating organization, which would basically look after the FinTech platforms, right? And this would have players from government, regulators, and even the so from the industry bodies and whatnot, where there can be some kind of an accreditation to the apps which can operate in the Indian market, right? So probably moving towards that direction would be, which is quasi regulated with a special body that has been set up. Still kind of the body reports to the RBI, which is way easier for RBI to kind of manage it rather than managing each and every other fintech platform that would kind of evolve, right? So what we have seen in at least last 3 months, or in the month of June, July, August kind of month of 2020, we used to see that there were at least 100 apps that were coming out online on a monthly basis. So, and in last 3 months, what we saw was like every other month there was 100 apps which were going down, right? So it has become so dynamic, and I guess that a self-regulating organization would be a right answer, or probably the way to kind of move ahead with. Yeah.
So interestingly, Madhusudan, one of our earlier panels when we were discussing crypto, overall blockchain was the course for the discussion. But when we came to specifically crypto, the lack of an underlying asset became a subject of discussion, and I think it came to why we're potentially banning it, and this whole idea of a self-regulatory body, that did come up for discussion. So I think it kind of segues in the next thought that I have, that look, we've talked about how we are moving from the existing way of doing business to the new way of doing business in the digital domain, right? And we are addressing how to change existing processes and existing risks. How are they tackled? But what about emerging risks? What do you see? Let me first come to Nirav there. What do you see as the emerging risks, right? What are the new challenges that we are going to face, which will require regulation, whether self-regulation or whether RBI-led strong regulation? What are those key challenges that you see?
I mean, see, digital lenders are growing really, really fast, right? And as they grow fast, especially the ones with NBFC licenses, they would become systematically important at some point soon. Now, when that happens, one of the fundamental risks to really look at is your credit underwriting model. And today, credit underwriting has evolved into, has started moving away from traditional credit underwriting to, all-encompassing credit, even for new to credit customers. And we have yet to see, how that pans out over the next several years. So if I've given out a business loan, which is a term loan for 3 years, right? How are you monitoring that risk? How is that? How did that credit underwriting algorithm get proven? It takes time to prove data. Now, and that's fundamentally the big challenge here, uh, with moving away from traditional credit underwriting models. So that's one emerging risk that I see. The other, of course, emerging risk is, when we spoke about crypto, right? Now, this whole idea of being able to replace traditional currency with crypto, and while there are merits to it and there are demerits to it, the does the Indian consumer actually understand crypto really well? A majority of the Indian population doesn't understand equity, doesn't understand most investment products. They don't know what insurance is. So if you are going to create, bring this in some shape and form, and it becomes a speculative product, right? Which creates a lot of hype, etc. You are putting at risk the Indian investor, the Indian Aam Aadmi, so to speak, who's not probably as aware as some of the emerging markets. So I think that's also a risk to think about. Finally, of course, when you have ease of credit, right? When you have credit availability becomes extremely easy, there is a tendency to overborrow. Uh, so I'm we personally think that good credit is good credit, bad credit is bad credit. I mean, there is nothing like this could be good credit, and nobody knows yet. So it's fundamentally those are issues to kind of think about.
Right. Thanks. Your thoughts, Madhusudan, on the emerging risks?
Um, the risk is something like this, So every regulation that comes in is going to be good for some people and bad for some other guys, right? So I think that's how it starts with. It's not always beneficial to everyone. I don't think any regulation or a law can be made that is beneficial for each and everyone, right? So one of the recent things what we have seen in the NBFC new regulations, right, is changing the net own fund from being 2 crores to 20 crores. That's the draft guidelines, which has basically kind of come out in the market now for a review, right? So with that, let's just look at that particular clause and what kind of risk that probably puts it into a fintech or a startup world, right? So see, when we raise seed rounds, we are not from basically a millionaire background, so we come out and then we raise funds and then we start the startup. So the seed fund what we get is about $1 million. That's the real seed fund what we can go out and raise in the market. Now that is about like 7 crores, right? So now raising a bar of a net owned fund from 2 crore to 20 crore would make it somebody to raise a $5 million of a seed round, which is not existent in India. If somebody wants to kind of start up and have an NBFC in his model and to kind of go and apply for such licenses, probably it was easy for us in 2015-16. Of course, we have grown beyond that, but when we had raised our seed fund, we could definitely go and apply for a license and then start our businesses. But that kind of a change in the regulations will act as a risk for many of the new players who would be kind of trying to plan their models. They have to kind of start looking at rebuilding their models in a way that either they have to accommodate a larger capital or probably change in their business model to kind of work as purely a platform, but kind of postpone their thoughts of applying for a license probably for like next 1 or 2 years before they raise Series A or Series B kind of a rounds, right? So till that time, probably applying for a license becomes way tougher now. That's one thing. The second thing is many of the guys who are in the mid stage, for example, they have a license and now they don't have enough capital to kind of increase their net own funds to kind of 20 CR. So one of the key things that what happens to those guys is, only work on that aspect to retain the license, but not, probably their business models have to change, their strategies have to change, and then they probably have to raise more capital to kind of retain the license and then be eligible to kind of operate with the license, right? So what I'm trying to say is that when the regulations comes for a reason, so if you see that this is the right time for the regulations to come, because there are a lot of things that are happening in the field which are going very unregulated way. Even the consumers are questioning that how are these people or some of these rogue players are allowed to kind of operate in the Indian market, right? So then in that case, the regulations have to come in. Once it comes in, it will be definitely beneficial for a larger community is what is my belief, but definitely may deter a lot of plans of many other guys, right? So that's one thing to state. And the second thing is the emerging risk is, with respect to the digitization of the entire lending process, somewhere, we're still not completely digital. We are in between phygital. Phygital is a new a term what everyone is coining now, right? There is the physical and the digital angle, both are involved here. So we are in between phygital and digital. We are not totally gone digital yet. Be the new regulation of video KYC requires a personnel being in the background to conduct that particular KYC process over a video call. So there is a physical presence of a person, right? So it's at least, one thing what it kind of avoids is this particular physical guy need not walk into the place of a customer and then do a face-to-face discussion, right? So somewhere, there is a phygital and moving towards digital is the process what we are in. I guess I just hope for that conversion or the transformation to happen much faster, which can be more efficient for a lot of players in the market to kind of make their processes more efficient. Yeah.
Thanks, Madhusudan. So, Nirav, now that we've talked about all of these aspects, I think one of the things that's coming out clearly is that there has to be a lot of active participation from all the stakeholders, right? Whether it's the government and regulator, whether it's the platforms, whether it's the tech providers, the participants, the consumers, right? Everybody has to come in there to ensure, that the regulatory framework is prepared well. It is, Madhusudan did say that, you can't create a regulatory framework that's good for all, right? So we have to create something that's, good for the majority, right? But what do you think is the best mechanism to bring together everyone onto a single, platform and create a positive regulatory environment?
So Madhusudan brought out a great point. Like he spoke about regulate an SRO, for example, right? So today there are fragmented organizations. There's a digital lending SRO, so to speak, which represents the interest of digital lenders. Of course, there is FACE, which represents consumer lending. Now, if one could create a body where all of the constituents, like NPCI, for example, for payments, I think that would make a significant difference to representing the digital world to the government in a more efficient manner.
So, Madhusudan, in your in your engagement with the regulator, for example, have you seen any inclination towards going towards the self-regulatory or a hybrid model where there's a self-regulatory platform that reports to the RBI, and how do we ensure? So, for example, when one talks about 100 apps coming up in a month and 100 apps going away in another month, consumers not being aware of what's right and what's wrong, because I download something from the Google App Store, it's rated 4-star plus, 1 million downloads. That's the only way I can find out whether this app is viable or not, right? So have you seen that inclination? If not, then how do we go in that direction?
See, I think I wouldn't be able to comment on what regulator would be thinking about. It's more about what the proposals, what we have given to the regulator, right? So I think they have they have given that opportunity for us to go and represent, discuss in detail the pros and cons of each and everything. So it has not gone with a idea that probably this is not the way to go about or anything of that sort. But probably they have accepted our recommendations. That's where it is. But definitely they would be consulting many other players, not just the NBFCs or the FinTech players, but they would be consulting with the many other stakeholders, right, to come out with what's right for the industry. So I wouldn't be able to comment on that, whether they are inclined towards this or not. But I would rather propose strongly for an SRO to be in place, because it's the right time for an SRO to be in place. That's one thing. Second thing is, while we talk about different other SROs where there is a lot of regulatory and industry bodies which are part of it, here in the digital lending space, I think there are many other new players who have to be part of this kind of ecosystem, which is starting from Google, right? So I think Google becomes a larger stakeholder because that acts as a platform for us to distribute our apps, right? So Google needs to be part of such SRO, right? So it should be basically the regulator, the government, the Google, then the industry players, banks can be part of such kind of an SRO. which can definitely give an accreditation to which app to be live. That's where it becomes a stop, right? So if Google is part of it, then Google knows whom to be kind of approved to operate in an Indian ecosystem and whom not to be approved for an operating in an ecosystem, right? So and in the past, what I've seen in this last 2 months is Google also has played a major role. So it has basically asked every other app or a lending app to provide a lot of details about the partner NBFC or the licenses, and give declaration of the directors on certain activities what the platforms are doing and whatnot. And based on those processes, I think they have really taken off many apps. So I don't think the regime is as it was in 2020 now. Any app which comes out to do the lending, I think there are multiple more certifications what they have to provide to Google before they can get themselves authorized to operate it. But having said that, that's a very soft way of controlling it, what we are seeing it. But probably moving towards a little bit of a stricter regulatory regimes might make it more formalized. But as I told, some people might be at a disadvantage when such things happen. Yeah.
Great. Thanks, Madhusudan. So I think, we've got some deep insights from the both of you. I think it's an emerging space. There are lots of imponderables here. But if you were to give us a 2-minute wrap where you could talk about what you think are one or two of the emerging opportunities in this space and how they lead to challenges, right? And what are those one or two key challenges that need to be kept an eye out for? Because earlier we were talking about in one of the panels that 10 years ago India and its digital stack, etc., was way behind. I read a report that Pakistan was doing more mobile payments than India at that time, right? Now we are way ahead of the world, right? So what is it that what are those emerging opportunities that we need to seize now so that we don't fall behind the world again? And what are the challenges to going there? Maybe Nirav, we can start with you.
Sure. I think the biggest opportunity is ease of business, right? Or ease of availability of credit.
Right.
I think that's an opportunity which should not be missed. Like Madhusudan rightly said, move away from phygital to completely digital, because that one singular thing would create, I would believe, a lot of financial inclusion. And I'm not talking just about fintechs or digital lenders, right? Even for banks, even for regular NBFCs, brick and mortar companies, right? There would be a tremendous impetus for them to reduce operating cost and go out there and acquire more customers and thereby proliferate credit better. So that's one thing. The challenge, of course, there is, getting buy-ins from everybody, getting the regulator to kind of agree to it, getting the legal system to agree to digital contracts. I mean, it's still yet to be proven whether a digitally signed contract can be enforced in a court of law, even under the Information Act 2000. So these are a few challenges that I think come in the way, which could be relatively easily solved if the regulators and all of us come together under an SRO and address these issues. That's one. I think also with regulation around digital marketplaces and lender apps, I think that the opportunity for genuine digital lenders with an NBFC license, etc., becomes more and more. There is a larger opportunity for them to play a bigger role, because you're doing away with spurious lenders and like Madhu said, usurious rates, etc. So that for relatively smaller digital lenders, the growth curve could be significantly improved. Should some of these elements be taken care of? You're on mute, Prasar.
Prasar, you're on mute.
So sorry about that. Yeah, sorry. So Madhusudan, so your views on what's the next big thing that we need to look out for, and how do we make sure that we overcome the challenges to stay ahead?
Yeah, I guess for me it's coming from the fintech background, and we do everything related to finance. I think financial inclusion, right? So let me put it that very strongly. Financial inclusion across everything. It's not just about lending, so last mile, taking all the services, taking the banking services to the last mile. I think that's what the digital world or the technology can enable it, right? So as I was telling, right, so the credit footprint or the bureau footprint of people is only about like 25%. The credit card penetration is about like 2 or 3% in India. The insurance penetration, I mean, how many people have health insurances? Right. So if you just take off the metros and tier one cities, the health insurance penetration is so low here. The life insurance products or the saving insurances are so low, right? So taking these things from being metro tier one products where a lot of benefits are there from these financial products to taking it to the last mile is something where there's a huge opportunity. The market is pretty large, so why not, I mean, just to kind of give one particular thought about a product, why not have a medical insurance with a premium as low as like 100 rupees per month, and then cover not more than 10 or 15,000 rupees, because a particular guy in a tier 3 or a rural area going to an hospital, the charges what they are looking at is about like 10, 15,000, 20,000 rupees cover. Unlike what we go to our metro hospitals and then spend about lakhs together for a simple operation or a procedure, what we have to do it, right? So why not curtail or build products with a low premium products, which is affordable to a lot of the mass markets, and then even the cover can be kind of cut, set as it is required for such specific pin codes or cities itself, right? So financial inclusion, taking the banking services and products from metro tier 1 cities to rest of India is the larger opportunity. The mass is huge. The people are, I mean, it's the emerging middle class what is coming out of from these cities, and they would be looking for such products, and digital or technology is going to enable to kind of get these products to those people. I think that's where the opportunity largely lies, according to me.
Great. So I think that covers the topics for today's panel. I'd like to thank both Nirav and Madhusudan for their insightful conversation. It was great having you here. We thank you for your time, and I think with our fintech community now scaling up, we're keen on going to deeper insights into what we've been doing. So we'd love to have you on our platform in the future, one-on-one, probably try and understand this more in detail, right? Each of your perspectives, especially the regulatory perspective. So, but before I do wrap up, if there are any parting thoughts that either of you have, we'd love to hear from you before we close this down. So I'll leave it to Nirav first for his wrap up thoughts, and then we'll come to Madhus.
Prasar, thank you for conducting this so well and having us on the panel. I just think, I echo, the thoughts that we've had throughout this session, that I think there is a great opportunity for financial inclusion should we streamline certain processes, whether it's credit or other financial products. I think that's a humongous opportunity. And I don't think it's that big a challenge to surmount. I mean, we've reached so far, in terms of getting to a semi-digital era. I think it's time that we go the full hog and get it done. Also, I think RBI is a phenomenal body. I don't think they overregulate, and I think they have done a phenomenal job in helping fintechs in India grow. And I think that full credit goes to the RBI for that. So I think we live in a very exciting era. I think the next 10 years would be phenomenal for the fintech industry in India, and thereby help the economy, to a great extent. So that's my 2 bits. Thank you.
Great. Thanks for your time, Nirav, and thanks for the wrap up. Madhusudan, we'd like to hear your parting thoughts.
I guess thanks for the opportunity, right? So it's been well conducted, and with all what we do, I think media also plays a larger part here, because every messaging, and it has the right messaging that has to kind of go out to what we try to intend to do, be it be financial inclusion or the individual company like us doing a last mile lending, last mile lending, whatsoever it is. I think it's a larger place also with the media, and to take such messaging, take such thoughts and educate the consumer, and that's going to make the definitely going to act as a catalyst to this entire transformation towards digitization, what we are kind of now going through or evolving to. I think that's the thoughts. And again, thanks for inviting us. And there was some great thoughts which I could hear from Nirav and even the other session what I partly attended. So thanks on overall things. Yeah.
Sure, thanks. And before I let you go, just 5-word or a 10-word answer on because it's going to impact fintech and digital business as we go ahead. What are your thoughts on cryptocurrency and what we are hearing about it being banned? So just quick, short answers from the both of you.
Honestly, I don't understand it. So I'm probably not the best person to answer. I just fundamentally think that for a country like India, one needs to be cautious about a product like crypto. That being said, if it's used for the right application and if it's used in a closed loop platform, I think there's great opportunity.
Great, Madhus.
Yeah, I guess I think what we are lacking as of now is the education. So these are certain products which are beyond mutual funds or SIP-based products or investing in equities, investing in shares and whatnot, right? So it's kind of goes to an investment management activity, right? So it's really beyond that. So with that thing, I would say that it's probably something that it's in a it's in a stage where the regulators, the consumers, and the general population is trying to understand what exactly is this product and what its effects are. So we are in a very, very nascent phase of trying to even regulate and then offer such products in the Indian market. So it's going to be probably taking time for everyone to come on a same thought process and then see whether this can be operated in India or not. Yeah.
Great. So thanks both of you for your time. Great, lively, insightful discussion. And like I said, we'd love to see you again on one of our BW platforms again very soon. And we hope to keep in touch with you. Thank you very much. Both.
Thank you. Look forward to it.